Owning a home. It's a dream many of us share. It's a cornerstone of the American dream, a symbol of stability and success. You picture a place of your own, a yard for kids or pets, a porch for morning coffee, and a space where memories are made. But before you paint those walls and plant that garden, you need a mortgage. This is where the journey begins. And that's where your credit score steps into the picture. It's more than just a number. It's a key to unlocking your future. Your credit score is like a financial report card. It reflects your financial habits and history. It tells lenders how responsible you are with money, how well you manage debt, and how likely you are to repay loans. A good credit score can unlock the door to homeownership, making it easier to get approved for a mortgage with favorable terms. A bad credit score? It can slam that door shut, leaving you stuck in a cycle of renting and financial frustration. But don't panic. You can take control of your credit and boost your score. Start by reviewing your credit report for errors and paying down high-interest debt. It takes focus and effort, but the reward of owning your dream home is worth it. Let's get started on this journey together. Remember, financial peace is possible, and I'm here to guide you every step of the way. With the right steps, you can achieve the dream of homeownership. A low credit score doesn't just affect your mortgage application. It can have a ripple effect across many aspects of your financial life, creating challenges you might not even be aware of. It impacts your financial life in many ways. From the interest rates you pay to the opportunities available to you, your credit score plays a crucial role. Think of it as a domino effect. One small issue with your credit can lead to a cascade of financial difficulties. Bad credit means higher interest rates on loans. This isn't just limited to one type of loan. It affects everything from personal loans to auto loans and even home mortgages. That means higher monthly payments for your car, credit cards, and even your mortgage. These higher payments can strain your monthly budget, making it harder to save or invest. Higher interest rates mean you pay more over the life of the loan. This can add up to thousands of dollars over time, money that could be better spent elsewhere. That's money you could be saving for retirement, your kids' college, or even just for fun. Imagine the possibilities if you weren't burdened by high interest payments. Plus, a low credit score can limit your options for apartments, insurance rates, and even job opportunities. Landlords and employers often check credit scores as part of their decision-making process. But it doesn't have to be this way. You have the power to change your financial future. You can break free from the grip of bad credit. It starts with understanding your credit report and taking steps to improve it. Taking steps to improve your credit score is an investment in your financial future. This might include paying down debt, disputing errors on your credit report, or building a history of on-time payments. It's about taking control and opening doors to a brighter future. Remember, knowledge is power. The more you know about how credit works, the better equipped you'll be to make smart financial decisions. Let's equip you with the tools you need to succeed, from budgeting tips to credit repair strategies. There are many resources available to help you on your journey to better credit. Your credit score might seem mysterious, but it's not magic. It's a calculated number that reflects your financial behavior. This number is derived from your financial history, which includes various aspects of your financial life. Several factors influence this score, and understanding them is the first step to improvement. Payment history is crucial. It's one of the most significant factors. Do you pay your bills on time? Consistently paying your bills by their due dates shows lenders that you are reliable. Late payments can drag down your score significantly. Even one missed payment can have a negative impact. The amount of debt you owe also matters. High levels of debt can be a red flag to lenders. Lenders look at how much credit you're using compared to your available credit. This is known as your credit utilization ratio. The length of your credit history matters too. A longer history can demonstrate your experience with managing credit. A longer history of responsible credit use generally means a better score. It shows that you have been managing credit well over time. New credit applications and the types of credit you use also factor in. Applying for too much new credit in a short period can be seen as risky behavior. It's a lot to take in, but remember, you're not alone in this journey. There are resources and people who can help you understand and improve your credit score. Millions of Americans have been where you are now, and they've come out stronger on the other side. With patience and effort, you can improve your credit score and achieve your financial goals. Don't confuse your credit report with your credit score. They're related, but different. Your credit report is like a detailed financial transcript. It lists your credit accounts, payment history, outstanding balances, and more. Your credit score is a 3-digit number that summarizes the information in your credit report. Think of it as a simplified grade based on your financial transcript. You're entitled to a free credit report from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion, every year. Request your free reports. Review them carefully for any errors. Disputing and correcting errors can improve your score. Knowledge is power, and understanding your credit report is the first step to taking control. Action plan: get your free credit reports. Ready to take charge of your credit? Great. Let's start by getting your free credit reports. You can order them online at annualcreditreport.com. This is the only website authorized by federal law to provide free reports. Once you've requested your reports, you'll receive them by mail or electronically. Set aside some time to review them carefully. Look for any inaccuracies, such as accounts you don't recognize or incorrect payment information. Remember, you have the right to dispute any errors on your credit report. The credit bureaus must investigate and correct inaccurate information. This process can take some time, so be patient and persistent. Dispute errors: your right to accurate reporting. Finding errors on your credit report can be frustrating, but don't worry, you have the right to dispute them. Each credit bureau has a process for disputing inaccuracies. You can usually file a dispute online, by mail, or by phone. When you file a dispute, provide as much documentation as possible to support your claim. This might include copies of bills, payment confirmations, or other relevant documents. The credit bureau will then investigate your dispute and contact the creditor who provided the information. You'll receive a response from the credit bureau within 30 days. If the investigation confirms an error, it will be corrected, and your credit report will be updated. Remember, you have the right to accurate credit reporting. Don't hesitate to exercise that right. Payment history is king. Catch up and stay consistent. Remember how we talked about payment history being a major factor in your credit score? It's time to tackle this head-on. Late payments can significantly damage your credit, so it's crucial to get current and stay current on all your bills. Create a budget and a bill payment system that works for you. Set reminders or automate payments to avoid missing due dates. If you're behind on payments, contact your creditors immediately to discuss options for catching up. Remember, consistency is key. Make on-time payments a habit, and you'll see a positive impact on your credit score over time. It takes discipline, but the rewards are worth it. Credit utilization: lower your debt-to-credit ratio. Credit utilization refers to the amount of credit you're using compared to your total available credit. For example, if you have a credit card with a $10,000 limit and a balance of $2,000, your credit utilization is 20%. High credit utilization can hurt your score, even if you make your payments on time. Lenders see high utilization as a sign of financial stress. Aim for a credit utilization rate below 30%. The lower, the better. You can lower your utilization by paying down your balances aggressively or by increasing your credit limit, but be careful with the latter. Increasing your credit limit can tempt you to spend more, so use it wisely. The Credit Card Shuffle: strategic balance transfers. If you're struggling with high-interest credit card debt, a balance transfer could be a helpful tool. This involves transferring your balance from a high-interest card to a card with a lower interest rate. This can save you money on interest charges, making it easier to pay down your debt faster. Many credit cards offer introductory periods with 0% APR on balance transfers. Take advantage of these offers to give yourself some breathing room. But be aware of balance transfer fees. Make sure the potential savings outweigh any fees associated with the transfer. Remember, this is a strategic move to help you manage your debt, not an excuse to accumulate more. Avoid new debt. Stay focused on your goal. You're working hard to improve your credit score and achieve your dream of homeownership. Don't sabotage your progress by taking on new debt. Every time you apply for new credit, it can result in a hard inquiry on your credit report. Hard inquiries can temporarily lower your score. So avoid applying for new credit cards, loans, or even store financing while you're focused on improving your credit. Stay focused on your goal. Resist the temptation of instant gratification and keep your eye on the prize, a brighter financial future in your own home. You've got this. Patience is key. Time is your ally in credit repair. Improving your credit score takes time. There's no magic wand or overnight solution. It requires patience, discipline, and consistent effort. Don't get discouraged if you don't see results immediately. Focus on making positive changes to your financial habits. Pay your bills on time, reduce your debt, and avoid opening new credit accounts. As you demonstrate responsible credit behavior, your score will gradually improve. Remember, you're playing the long game here. Stay committed to the process, and you'll reap the rewards in the form of a stronger financial future. Celebrate your success. You're on your way to homeownership. As you watch your credit score climb, take a moment to celebrate your progress. You're taking control of your finances, and that's something to be proud of. Each step you take toward improving your credit brings you closer to your dream of homeownership. Remember why you started this journey. Picture yourself in your own home, enjoying the freedom and security that comes with it. Stay motivated, stay focused, and keep moving forward. You're well on your way to achieving your goals. Congratulations on taking this important step toward a brighter financial future. Join the community, subscribe, and share your journey. You're not alone on this journey. Millions of others are working towards their financial goals, and we're here to support each other. Subscribe to my channel for more tips and advice on achieving financial freedom. Share this information with your friends and family who might benefit from it. Let's spread the message of financial empowerment and help everyone achieve their dreams. Remember, together, we can do this.